Hello traders, welcome to a FreeFX video. Today is Tuesday, the 6th of October 2015, and I'm going to show you a little bit today a number of things really that have been happening in the trading world. Certainly for my own trading account, I've really had a lot of time to reflect on my own trading in the last few weeks, certainly since the so-called Black Monday, which is not actually the correct name for it, but anyway, the 24th of August, when we saw that huge movement in the markets due to Chinese data. So I wanted really to take the conversation from where we're at based on that and the movements that we saw around that time. Certainly it seems that the markets have been a little bit unmoved in the long term by the price of the day, that the Chinese market had suffered a severe blow, and it seems that something else should have replaced that panic in the markets, but nothing really seems to have solidified or consolidated into some kind of trend. So let me start with, you can see I'm flicking through charts at the moment and looking for a starting point for our conversation, and I'm really trying to find the one that really best encapsulates what we're trying to see here. Really, possibly the best one, although not one that I'm trading, is the Euro US dollar. Oh, this is a very popular pair of currencies, so it does actually help to use this to show why there is such a reticence, such a feeling in the in price of no movement, or a lack of determination in taking this a step further to the downside, or, as it may be the case here, a step away from the downtrend. Now, in this chart, which I prepared and used in a previous video, so I've gone back to it where I left it, which was roughly where this trend line was, and you can see that it has rebounded from there, but nothing really has moved to a certain degree in that it's not really got us anywhere. So we have here more than a trading week, and really the candles have been getting smaller and nothing else really has happened. And one thing I like to use is FXCM real volume indicator, and you can find this if you did actually want to put it on this chart. You'll find it a very worthwhile indicator. I just realized that the monthly is not supported, so we'll leave it for now, but certainly it certainly would give us an indication that volume as it is has not really been particularly strong. And indeed, if I took it down to the weekly, I may be able to add that just to show you really what bear bear with me 1 second, just to show you what the volume indicator can show us really that price itself cannot. So this is it's now the weekly chart, but the area that I've drawn is still the same, and you can see that the volume has been declining from this peak here, the 22nd of August. So clearly the situation is that volume has been declining, and if I took it down to a daily level just to kind of make it a little bit clearer, you can see there was this spike on the 24th of August. That was the Black Monday that we were talking about, and that went up to over 10 billion units of real FXCM volume trading for this pair. But then after that, subsequently, volume really has dropped quite considerably. Now, yesterday we were at something like 5 billion. Yes, it's come down quite a bit here, and not only is volume declining, I'll make it a little bit more obvious. If you can see what I'm doing, I'm trying to squeeze a few more days, and here we go. Now you can see if I did this. Okay, let's leave out that spike and this spike as well, but generally volume has been declining overall in the last month and a half, Okay, so this is telling us that there may be movements, and indeed if we went back to previous situations, there's a lot more volume coming down to this trend line support, and there may be reasons behind that, because certainly it isn't always about the technical move, but the fundamentals behind it that feed the fuel and the flames. So looking at this chart, really, I see a lot of indecision, and yes, we've rebounded from here, but we've not really gone particularly far. And although things don't happen in a straight line, if you look at the decline here, the decline from the 140 area when Draghi was talking about the currency being overvalued, that was a much faster decline, and the climb back has been particularly quite slow. If you compare it to, say, these spikes in 2008, this rebound in 2010, which really did give us higher highs, higher lows, okay, this has not particularly moved in the same with the same strength and determination. So we must be aware that if the euro, which is fundamentally a weak currency and a weak economy and undergoing quantitative easing, right? So if the euro is not able to provide the dollar the upper hand and continue to the downside, resists this move but has no fundamental backing to do so, except maybe some relief or covering of shorts, okay? But there's no particular sentiment that's euro positive. So we really are in a stall situation, and this is down to the US dollar, which really has seen a lot of indecision. And for that, I think we need to go to our US dollar chart. This is the FXCM Dow Jones dollar, so we can see where we are. So here's the picture of the dollar on a monthly, and you can now tell that there hasn't really been particular strength in the dollar either. And this really gives us an idea of why the majors are being so indecisive. Pound dollar, I'll try to overlay that with the S&P 500, just give you an idea of where we're at. Okay, so you can see the S&P 500 has been dropping and the dollar has been rising, so they're going in opposite directions. And you can see it probably more obviously on the daily chart. Okay, so they're moving in opposite directions clearly, but they're both moving in opposite directions and also moving in with the same indecision, because this is the S&P 500 in light blue, and it's dropped considerably from these highs in August down to here, but it's kind of returned to them, these bottom levels, and it's chopping up and down. It's not particularly made a move to continue to the downside. It is a very dangerous situation here for investors in equities like the S&P 500 index, because we are at all-time highs, and yet we do not have enough conviction to break down this over leveraging. And the same goes for the US dollar, which is quite overvalued, quote unquote, but it will not seemingly either break down or continue and rally further past these highs in March. This gives us a lot of indecision, obviously, both in risk-related currencies and also currencies that relate directly to the US dollar as the majors. So the Euro USD obviously is suffering from that. The pound US dollar is suffering from that. This indecision here, which is really indicative not just of the US dollar's indecision, but also of the Bank of England's failed bid for a rate hike this year. We have this later this week on the 8th of October, that's Thursday, 2 days from now, we have the Bank of England's interest rate decision, which is by all accounts meant to stay the same. So this is also why the pound US dollar has been struggling with, the cable has been struggling with indecision. And also, again, if we added the real volume indicator, you'd see that there isn't a particular thirst for high volume bidding in any particular direction. You can see coming up we have on the daily chart the volume is sort of been kind of quite low. Really, these moves have not been sustained by high volume after this particular move, which was the candle here on the 8th of May, which actually propelled the pound upwards. And we did see at this point, not just through high volume, it was a genuine move and optimism that the Bank of England was going to raise rates, and indeed we had a mini uptrend with this trend line, and this gave us hope that there would be a move from the Bank of England, possibly leading other banks, and you can see the higher highs here, so almost like a channel between these tops and bottoms. But then we've broken through this trend line, and we are basically back. If you can see where we are now, it's back to where we started before this new bout of optimism. So if I just borrow this trend line and changed it for this particular purpose. Now, so this is where we started back in May, and we've returned to those levels, which means that all this time, May, June, July, August, September, 5 months, it got us nowhere. So the cable, i.e. the pound US dollar, has not actually gone anywhere. And indeed, if we made it into a bigger chart, you can see the context of where we are. This particular line is truly where the this almost cycle, you could call it symmetrical pattern, certainly going back all the way to the 90s, we are back to these levels. Okay, and the last time we rebounded and we broke below it, so we came into 3 sections. Okay, and then finally this big move. So now we've returned to these levels. If we went sort of the other way, we see the bouncing up and down from this level. Now, of course, there are other levels below it, and this is quite a reduced and simplistic view. This particular level doesn't offer us particularly a lot of round numbers tend to work better. So if we said that 150 was a level generally where we might be heading, then well, we're not far from it. It's 151. So you can see that the pound is also at a critical level, and we discussed this in the previous video where we talked about the Kiwi US dollar as well, another major pair which has gone through this huge cycle. You can see the swing here from 0.40 to 0.75. That's a big move. And then back to this trend line, which is a trend line within the, there are other trend lines within that. There's this trend line as well, but this sort of bottom of them all really has supported in the 2008 crash, and we're back to it now. So this is confirmed as a trend line because it has 1, 2 touches, and now for 2 months we've kind of rebounded from this, which tells us that possibly we may be continuing higher, although it's too early to say because it did happen here. It's not meant to be the same exactly every time. This could actually break down, so we need to really see where we're at. This is the obviously the 100-day moving average, and we've gone below it for a little bit. So not to say we'll stay below it, but certainly it's an important point here where we might need to decide where we're standing with things. So the 8th of this month, the Bank of England's rate decision, and then later this month we have on 22nd the 20, yes, that's right, the 22nd is the ECB rate decision, 22nd of October, and on the 28th we have the US Federal Reserve and the Royal Bank of New Zealand rate decision. So something like the pound Kiwi might be something of interest if you were to look at the Kiwi rate decision. But certainly, as you can see, we've come to this long trend line top, and we've sort of rebound from it. And now we know that we're not broken through it. So again, the pound is in trouble unless it picks up. This might actually be it for the pound Kiwi for the time being. So lots of event risk. This week is quite quiet, so not much happening. So I'd like you to really take time to reflect, think if your trades are going well and where you might be heading next. Where is risk going next? What's happening? Nothing seems to happen. So keep an eye out for any moves. They may come from absolutely anywhere. Good luck trading. Take care out there and be safe.